I mean, that's crazy, dude. You're talking about like for a normal user, it goes from a quarter second to half a second, but it's providing a lot of value back to the chain, the DAO itself, and like long term value in a beneficial way. So like MEV gets a lot of negative connotation around it because generally it's not always beneficial. Like you said, it can allow people to run sandwich attacks in different ways that are not really helping anyone else but themselves. Versus this is just somebody trying to get a single transaction quicker or certain transactions quicker without necessarily seeing what's happening on in the mempool and not really able to compromise anybody else's transactions in the process. Is that a fairly accurate way of describing it? Hey Chase, welcome to Chain Reaction. Great to have you here, man. To kick it off, I'd love for you to tell our guests a little bit about yourself and your background, specifically how you got into blockchain, crypto, and into your current role.
Yeah. Hey, Feroz. Thanks so much for having me. Great to be here. Um, I started in the crypto space in 2020. Was doing research and venture at a firm called Token Metrics. They had ML models for short-term retail traders, and they had more in-depth research reports, long-form fundamental research reports for your fundamental longer-term investors. I started out doing customer support for them, and then later moved on to the research side, and they launched a fund. So I was doing some venture investing there. Moved into the world of business development for a firm called Magna back in 2022, right around the time of the FTX collapse. They were a Y Combinator startup that did Carta for tokens. And for the last year and a half, I've been at Offchain Labs. We are the core builders of the Arbitrum tech stack. So that's Arbitrum One, Arbitrum Nova, and the entire ecosystem of over 100 Arbitrum chains that are, live on mainnet and testnet or still in development. Over there, I lead our AI and infrastructure partnerships. So working very closely with great partners like Anchor, working with wallets, working with oracles, working with dev tool providers and bridges, as well as, all the way through to the physical infrastructure and down into the deep, deep rabbit hole of the convergence of crypto and
Dude,
AI.
that's deep. So what got you interested in blockchain in the first place? Like I know Token Metrics is great. They do a lot of research, a lot of data. They provide a lot of data. I've been on Token Metrics for a few years now, but I'm just curious, like what was that introduction into blockchain and crypto? What made you think this is what I want to do for like a career? Because you did get in pretty early. I mean, sure, a lot of people would say like early as 2015, 2016. I personally started professionally in this industry in about 2021. And to me, like every 6 months feels like 5 years in this space, right? Like so many things change, things move so quickly. Like 2020 is super super early in my view. What made you think like this is something that I want to do long term and start that path?
Yeah. Well, what matters is sticking
That's
around,
true.
right? That's the important thing. I think from a very before I even understood what this technology was, from a first principles perspective, gutting the existing financial system and building something that is fast, borderless, and digitally native and settles, in minutes as opposed to like T plus one, T
Hmm.
plus two, fundamentally made sense to me. And being a little bit of like a history nerd, I always said it's very clear like the way these sort of cycles happen, not crypto cycles, cycles of technological cycles. People, it looks like a toy to people. It New technologies are people are scared of, or they say that it's a fad, it will never replace this, that, or the other. And frequently those are just uninformed opinions from people who are incentivized to think that the existing infrastructure or the existing technology is here to stay, and will be there in perpetuity. Um, so that's sort of what made me want to stay. I would say, I got curious in 2020. Really, just took a job at Token Metrics. It was an unpaid internship, June of 2020, and that was kicking off the start of DeFi summer. We were in the depths of COVID and just watched innovation watch innovation go up into the right, watch prices go up into the right, watch the whole world go crazy for crypto. Not that I was driven by, those hype cycles or anything, but it was definitely fascinating to see, okay, this is these bubbles and bursts playing out in real time. And I want to be as close to the action as possible as someone who's extremely curious, and intellectually motivated to learn as much as possible. And I also saw an opportunity for, I was 20 years old when I got into the space, and I said, if I was applying for consulting, investment banking internships, what have you, and I just saw an opportunity for, okay, this is at the time, maybe 10-year-old industry, depending on when you date it. What if I'm in this industry for 5 more years and I'm 25 with 5 years experience in a 15-year-old industry? That's a lot better than being 25 with like 3 years experience in a 150-year-old industry like investment banking. There's always going to be people that are 40, 50 years ahead of me until I'm 60 years old. So there's a little bit of an arbitrage here. I think I underweighted that at the time, but it's been really exciting to see the industry sort of come in, and other industries sort of come in, and me be a value add or a resource or somebody that can explain something to someone who is much, much smarter than me and has way more experience than me in, other more professional or existing, more traditional fields.
It's really interesting you put it that way. Just a little connection. I had a similar breakthrough in, I think, 2018. I was still working for Samsung in marketing, and we had some retail stores, and we were selling, I think the newest phone in 2018 came out. It was the first Samsung device with crypto wallets. And so it had Ethereum, Bitcoin, and Tron native support on the wallets. And even then, like, I had talked about Bitcoin and kind of gotten into Ethereum a little bit, but it still wasn't something that I was engaged in very much. And I think 2019, 2020 is when I kind of started trading a little bit more in Ethereum, got into a little bit of DeFi, and then NFTs, of course, like soon after. And that's kind of what got me entrenched, was the technology. And I had a very similar thought process as you did, in terms of, this is not only a very new industry, but even like the programming languages. So it's something that I've been passionate about, is wanting to build things, but I don't have a software development background. And so Solidity being such a brand new language, that was kind of what gave me the confidence of, you know what, I can start learning this language. If I try to do like JavaScript and like all these traditional languages, people have 10, 20, 30 years more experience and college degrees in this specific field. Whereas Solidity, like, it's just being written. It's a brand new language. This is a brand new industry, and people are just starting to figure it out and build stuff. And so it gave me the confidence of being like, I can start learning this now, and there really aren't that many people that have a ton more experience or a significant length of time in building using these coding languages. So I'll be basically on par with most of the people that are considered experts in this field. And that's kind of what has taken me from just being interested and trying to learn more about the tech behind it to, just jumping down the rabbit hole and following a career into this field. Is the innovation doesn't stop. Like, we move so fast in this industry that it's like your head spins, and it's really cool to be able to be one of those people that's been in here now for 4, 5, 6 years. And people look at you, like you said, people with a lot more experience in traditional fields are looking at you and asking you questions and really listening to what you have to say, because you've seen so much in just a few years in this industry. And that it's something that gives me a lot more confidence in continuing down this path and really learning more and helping more people understand what the benefits are of blockchain as a core technological infrastructure, but also crypto and the value that crypto provides outside of speculative trading, which is what kind of gets a lot of us into this field in the first place. But yeah, dude, that's really cool. So now you've been at Offchain Labs with Arbitrum for a year and a half, you said. Quick question. I always like jump back and forth between calling it Arbitrum and Offchain Labs. So like, can I just call it Arbitrum as a company, or like what was the thought process behind Offchain Labs, and what all does that entail versus Arbitrum as a brand?
Yeah, sure. So Offchain Labs, it's called Offchain Labs because Arbitrum takes Ethereum execution off chain onto another chain, that being Arbitrum, the layer two. Arbitrum is the first product out of Offchain Labs. I would say Arbitrum Nova is the second, and I don't want to get my dates wrong here, but we also acquired the Prismatic Labs team in 2021, I believe, and they built the most popular consensus client on Ethereum, Prism. So, two or three market leading products at this point already. And yeah, like I said, Arbitrum Orbit being another product. Yeah, I would say Arbitrum is the chain. It's one of the most heavily adopted and used pieces of technology in the industry, and Offchain Labs are the developers.
Got it. Okay. I'm gonna stick with Arbitrum. It's a very, yeah, like everybody knows Arbitrum, right? Like it's been around for years, and like you said, it's very established. So now for the listeners that don't have a ton of experience in this industry, they may have heard of the name Arbitrum and may not know exactly what it does, right? Like everybody knows it's a blockchain. Can you give me just a quick breakdown of what Arbitrum was created for, what the actual goal was, and then how Arbitrum solves it and differentiates itself from competitors in the space that have similar goals?
Sure. Arbitrum was the first optimistic and largest rollup launched on Ethereum. So the first Ethereum layer 2, where Ethereum is a layer 1, which means it compacts execution, data availability, consensus, and settlement, the four pieces, if you will, into one chain on the layer 1. What Arbitrum does is it segments out execution, and it does execution it executes transactions for far faster and cheaper. It then batches or rolls up those transactions and posts them to Ethereum L1 every 15 minutes or so. But you're able to continue transacting during those 15 minutes that your transactions are still sitting in the batch poster, because we have a sequencer which gives you pre-confirmations, and there's a lot of cryptographic reasons as to why you can trust the sequencer, and if there's any risks being taken, or if there's any censorship being done, you can always force include your transaction to Ethereum. So we are able to benefit from fast and cheap transactions, but also the security and decentralization of Ethereum, because ultimately users' transactions do settle on the main Ethereum L1. A few ways we differentiate. One, we're the first only rollup to launch with fraud proofs, live interactive fraud proofs on day one. So this is how Arbitrum allows for the force inclusion mechanism. So if the sequencer ever tries to censor a user after 24 hours, they can withdraw their funds immediately to the L1, even if the sequencer doesn't want that to happen. So it ensures a lot of security. It's why billions and billions of dollars have been bridged to Arbitrum, because people feel safe there. We are also the fastest layer 2. We have 250 millisecond block times, as we were discussing before the recording. That's 8 times faster than our closest competitors. Some of our competitors are trying to cut their block times by doing pre-confirmations, which is a little bit of a roundabout way of cutting down block times, but that's neither here nor there. And then finally, we have Stylus, which added a co-equal WASM virtual machine to the existing Arbitrum execution environment. What this means is, for developers, you can write smart contracts in, the native EVM language, Solidity, which you were discussing, or you can write smart contracts in Rust, C, and C++. And they all ultimately compile down to the same bytecode, which means you can write a contract in half Solidity, half Rust, half C, half Rust, half Solidity, half C++. You can have V1 of your app written in Solidity, V2 written in Rust, and there's many performance gains that are available from writing in Rust and C in these slightly lower level languages, particularly on the memory and computation side of the equation. In addition to that, as the guy whose job it is to go out and tell developers, hey, you should build on Arbitrum for all these other reasons, there's a very, very limited number of Solidity developers in the world. I think the number is probably
That was the core of my
50,000.
competitive advantage in this industry, dude. Like, you're killing me right now.
Exactly. Well, you'll stay ahead on the Solidity side. There are probably 50,000 quality Solidity developers in the world. And the day Stylus went live, my total addressable market, 100, possibly even 1,000x to 5 to 10 million Rust, C, and C++ developers. So that's been live for about 9 months. We've got some good teams building there, like Renegade building fully on-chain dark pools, Fairblock building exciting privacy technology. There's great gains, particularly for cryptographic use cases, which our research team are some of the best cryptographers in the world. So they could speak for that on ours. But it's really exciting to see that have some good adoption, and we're excited to continue to see that sector grow.
Dude, that was an amazing explanation. Very in depth. So to like super simplified, right? Like Arbitrum is an L2. It's a scaling solution for Ethereum. So it helps people basically have the security of Ethereum, but be able to transact faster and cheaper. So when there's congestion, when it's too expensive on Ethereum, like there's no concern about what's going on ETH mainnet. You can operate on Arbitrum and have a similar experience, just much cheaper, much faster. And now with the advancement of Stylus, you can also have the developer attraction piece just explodes, where you can have a ton more developers that can comfortably build on chain and not have to learn a whole new language and a whole new way of operating from what they're used to. Is like that's like the quick snippet of how I would describe it. Is that fair? Yeah.
Yeah.
Right.
Yeah.
Okay.
I think that's
So let me ask you this in terms of, so you say your total addressable market for developers, basically 1,000x overnight, and it hasn't even been a year yet. So it's still fairly new. How does that look on the actual development side? Like, have you seen a ton of interest from traditional developers saying, hey, I've been trying to build on blockchain, I just don't have the time and resources to learn a whole new language after I've been, writing in C++ for 10 years. Like, what does that interest look like? How have you seen that side of it change when Stylus went live?
Yeah. Definitely in the last, call it 6 months, we've seen more and more interest on the fintech and institutional side. And the gap that still, frankly, needs to be closed, but is imminently getting closer, is how to enable on-chain privacy, and what does on-chain privacy actually look like? Does that just mean like blind bid, blind ask on an order book and the transaction itself is privatized? Or does that mean, the whole computation and the contract is also private? Stylus is, again, uniquely performant when it comes to cryptographically heavy use cases. So it's a very interesting value prop for us when we're going and talking to a lot of the institutions where privacy is a very key component for them. And many of them, have been writing in languages like C, Rust, and C++ for decades, quite literally. So it's something that makes them feel a little bit more comfortable about jumping into the space. And most institutions, if not all, are running various tests across many chains, and they're trying to understand where exactly they're going to dive in to the industry. And some will be slower, some will be faster than others, but we're extremely excited about those opportunities going forward.
That's a good way to look at it too, especially when you talk about bringing in institutions, because like that was the whole idea, is trying to advance this technology and kind of change the landscape of what people have been used to for decades now, for almost 100 years. And so allowing institutions that have this mature experience in their own right are now able to kind of bring that over into this new financial landscape, this technologically native financial landscape, and still feel a little bit more comfortable with how they do that when you open up the floodgates for, hey, you can bring the code and the developers and your engineers that you've trusted, and they can feel comfortable building within our ecosystem. And that provides a lot of just that level of security and confidence in the space, which I think is key, right? Because as much as we want to shift away from the old way of doing things and within the financial landscape, we do want to make sure that we're bringing that confidence to traditional institutions, so that we can have long-term viability in this space. Like, we don't just want to have a bunch of early adopters. Like, we need people that have been in the financial space for a long time to adopt this new technology and make sure that we continue to use it for the foreseeable future. So that's a great way of looking at it. And so I actually want to touch on a piece that you brought up right before we started recording. Can you tell me a little bit more about about TimeBoost? I'm not going to go into it because you obviously understand it way better than I do. But it sounds like a very interesting concept, and something that may apply here. So I would love for you to just give me like a breakdown of TimeBoost and what benefits it provides.
Yeah. Thank you so much for bringing it up, because I love talking about
I could
it.
tell.
TimeBoost is a way for Arbitrum chains to go from capturing basically 0% of the MEV that's being extracted by sophisticated players to almost the entirety of the MEV that's being extracted by sophisticated players. And redirecting it, in the case of Arbitrum 1, back to the community, back to the Arbitrum DAO treasury. So how this works is it's a transaction ordering policy. So TimeBoost auctions off the right, or the sequencer auctions off the right to an express lane. The owner of the express lane, all of their transactions have a 200 millisecond advantage over all other participants on the network. The auction itself is a sealed bid second price auction. So you and I are both auctioning. I can't see your bid. You can't see mine. I bid 100. You bid 80. I win, but I pay what you bid, which means there's some profit left there for me, because I believe that I can bid, or I believe I can make $100 off of this, but I'm going to pay less because I'm going to pay your bid. That's, sort of the game theory of second price auctions. This went live a week ago. We're recording on Friday. This went live last Thursday. It's been really exciting to watch it tick up. The DAO has already accrued over $50,000 in additional revenue. It's anywhere from 20 to 35% of network REV on Arbitrum. External estimates, Blockworks Research estimated that TimeBoost could add anywhere from 40 to like $180 million a year for the Arbitrum DAO. So that would be, potentially doubling or even tripling the revenue going back to the Arbitrum community, which can then be reinvested into other things such as tokenized money market funds, which the Arbitrum DAO has ever done. And the only downside to users is they experience a delay the length of a blink of an eye on all transactions. So a 200 millisecond delay, so that, the Arbitrum community can earn significant amounts of money every minute from the likes of some of the most sophisticated high frequency traders in the world. Also, very important to note that this is not auctioning off the right for Wintermute to sandwich you. The Arbitrum mempool is already private, so nobody can see your Uniswap transaction and bid you up to your slippage rate and make you eat 2% on every transaction or 1% on every transaction. Because the mempool is private, this is only searchers are only capturing what we call beneficial or MEV opportunities. So that's like SEX-DEX arbitrage, backrunning, DEX-DEX arbitrage, and things like liquidations on lending protocols or perps DEXs. So overall, it's been really exciting experiment to go from research phases to testing to ideation back to research. Okay, we need to fix this mechanism a little bit. We need to change this a little bit. There's probably more changes that need to be done. There's already a team that's built a secondary marketplace. So if somebody says, hey, 1 minute is a long time for me to own the express lane, but I know that I'm going to have this opportunity 2 seconds from now, you can purchase the right to just that arbitrage. Gattaca is running secondary auctions on this. They're the team behind Titan, the largest L1 block builder, or one of the largest. So yeah, extremely excited to see where that goes. And we had a new entrant in the market yesterday that's already bidding significant amounts. In fact, in their first 24 hours, probably, they set the record for the highest bid ever paid. First person to ever bid $100 for 60 seconds of time.
They must know something.
Well, or they're good at what they do. It's a prediction of volatility for the next 60 seconds. So that's today. I think markets are moving a pretty good amount. So I don't have my deck screen in front of me or my trading view.
I mean, that's crazy, dude. You're talking about like for a normal user, it goes from a quarter second to half a second, but it's providing a lot of value back to the chain, the DAO itself, and like long-term value in a beneficial way. So like MEV gets a lot of negative connotation around it because generally it's not always beneficial. Like you said, it can allow people to run sandwich attacks in different ways that are not really helping anyone else but themselves, versus this is just somebody trying to get a single transaction quicker or certain transactions quicker without necessarily seeing what's happening in the mempool and not really able to compromise anybody else's transactions in the process. Is that a fairly accurate way of describing it?
Yeah. The Arbitrum mempool or the Arbitrum sequencer has always been first come, first serve. This is obviously a slight adjustment. However, worth mentioning, if you and I are both non-express lane owners, it will still be first come, first serve for our transactions. And we've always believed that this is the fairest way to order transactions, and creating this sort of auction mechanism is a great way for the DAO to retain much, much more value that was previously leaking and, again, being monopolized by a few sophisticated players.
That's really cool, man. I really like the way Arbitrum operates in the space. There's something that you mentioned last time, specifically, like the term stuck with me, which is credibly neutral block space, which is what really makes Arbitrum popular. So I want you to touch on that piece. And like for me, I think stablecoins have been a very core part of the industry, and it's what helps people on ramp, off ramp, and like really gives you a stable store of value on chain. And so I want to just ask you to explain to me why stablecoin providers like are kind of, I don't want to say flocking to Arbitrum, but trust Arbitrum and really, I guess why they trust Arbitrum. I'll just leave it at that. And can you explain a little bit more about what credibly neutral block space means and what impact that has on attracting that attention?
Yeah. Yeah, I think a lot of folks would say that their block space is credibly neutral and unbiased. However, when the second largest stablecoin issuer is paying half of their revenue to you and you have your own blockchain, it's hard to say that there's not going to be a preference to one stablecoin over the other. So credible neutrality in our eyes is truly being neutral and trying to let the market decide who the best winner is or who the best player is. We believe we've done that, and we believe it's fostered a strong and competitive, and also actually surprisingly collaborative ecosystem. Even in situations where there's a lot of competition, there's obviously a lot of synergies that can be exploited in capitalism and in free markets. Two examples of credible neutrality being a strength and a strong selling point of Arbitrum is one, 2 or 3 years ago when Hyperliquid was first launching their original, product, which was simply the perp stacks. They've obviously expanded since then. They chose Arbitrum as the hub, or the only location where you can deposit USDC and bridge to their chain. They wouldn't have done that on a chain that is run by a centralized competitor. They did that on the most credibly neutral block space that they also felt was secure because of fraud proofs, because of the guarantees of trustlessness and permissionlessness of Arbitrum, and also because there happened to be a lot of liquidity, in particular USDC, on the chain. So you might see on Twitter people attacking us or people attacking Arbitrum for being the hyperliquid bridge. We just believe that we're credibly neutral block space, and I think anyone would want to be the hyperliquid bridge if given the option. There's 2 billion, at 1.2 billion USDC in that contract. When you are credibly neutral, we believe that there's always going to be people that are attracted to this fair free market block space. So the next example that came after Hyperliquid was the USDT Zero team, which is the USDT cross-chain asset powered by both Tether and Layer Zero, chose Arbitrum as the hub chain for that asset. So what that means is there's native minting on a few chains of USDT like Ethereum and Tron. But if you're transferring from any chain, call it like Base to Avalanche, that route's passing through Arbitrum. Arbitrum to Base, passing through Arbitrum. Even new chains that launch will have USDT Zero. So it's another example of the biggest company in the space picking Arbitrum for its credibly neutral block space, and it's a huge part of its chain expansion strategy. So yeah, we continue to have a lot of conviction in this thesis. It's something that's a slower burn, I would say, than partnering with a massive existing player in the industry. And not that we're opposed to that, but it's a great way to attract, teams that have tons and tons of confidence in their product and their ability to win in a free market.
Dude, and I mean, you already hit the top two stablecoin providers in the space. I mean, I think everybody knows USDC and USDT, like Circle and Tether have been the leaders in stablecoins for years at this point, and they're only getting more attention and providing more value. And to see that they're gravitating towards Arbitrum, definitely gives a lot more confidence to the ecosystem as a whole. Especially seeing, you really stick to the ethos of the space, right? Like being credibly neutral, being permissionless, like that's what people really want. And sometimes it doesn't make for the best performance, or it doesn't make for the highest level of security. Like there's different things that there are trade-offs in the space. And it kind of sounds like Arbitrum is addressing those in just the right way. Like you really found a really good product market fit. And people are seeing that. Institutions are seeing that. Stablecoin providers are seeing that. which is it's great and it's very impressive, and it's something that a lot of people strive for. And like you said, it is kind of a slow burn, right? Like it takes confidence in what you're building and the value you're providing, and you sticking to that course and letting the people come to you, which looks like that's exactly what Arbitrum is doing, and it's continued to grow in the past few years, and I expect it will continue to grow, especially with orbit chains. A lot of people that even want their own blockchains are looking at Arbitrum as that solution. So looking to the future, now that I've mentioned that, I'm going to just jump into our final segment, which is future vision. So how do you see Arbitrum growing in the space? What do you see happening in the next 5 to 10 years? Like what's most interesting to you in the future of this ecosystem?
Yeah, I really recommend for anyone interested in learning more reading AJ, our chief strategy officer's vision for Arbitrum as a digital sovereign nation, or the first digital sovereign nation. And I sort of condense it into this. When the Arbitrum DAO launched, it was seeded with a multi-billion-dollar treasury. And also a pretty sustainable business of selling block space, making money off of transaction fees, which last year was in the low to mid 8-figure range. So that's fairly sustainable. It can last a while if that $3 billion is spent right. But what if that $3 billion was put to use as effectively as like the Saudi investment fund or something like that? Like, what if we really expanded the economic zones of opportunities and the business lines of Arbitrum with things like TimeBoost? Every orbit chain, every L2 orbit chain is paying Arbitrum 10% of its sequencer profits, which is a great deal for the orbit chains as well. It's only 10% of your profits for using the entire, for basically giving you the entire backbone of your chain for essentially free. There's the Gaming Catalyst program, which launched. It was very controversial, but it's making investments into Web3 games, and the committee that's behind it, extremely capable of making what we believe to be strong investments that will accrue value back to the DAO. The Stable Treasury Endowment Program, the STEP program, took $30 million worth of ARB, or $35 million worth of ARB, and diversified it into tokenized money market funds. So the DAO is now earning $1 million a year worth of interest on T-bills. It's like the safest way you could possibly earn money, pretty much. If maybe them being tokenized creates an additional layer of risk, but let's pretend for a second that that's zero risk. It actually is, because they still own the T-bills. Sorry. From a technical perspective, I expect Arbitrum chains to continue to scale, to continue to push the boundaries, to continue to make customizations. So, for example, the Athena chain, which we didn't even touch on, but Athena and Securitize announced their Arbitrum chain last week with Celestia for DA. They're going to have portions of that chain that have permissionless apps. So they'll have like a permissionless perps dex that anyone can use, and then they'll have certain apps that are KYC'd with certain restrictions for institutions. So it's a beautiful blend, or convergence, hence the name, of Athena's DeFi heavy user base and strategies and yield largely coming from DeFi and crypto speculation, and Securitize's efforts to bring traditional assets on chain. So we're trying to converge the two in a network, in a safe haven environment for institutions to feel comfortable playing around. So yeah, those are a few of the ways we expect to see Arbitrum be everywhere.
It's exciting. I really like to see the fact that you guys have this tech stack, this Orbit tech stack that lets people build customizable chains on top of Arbitrum, really get that security of Ethereum while still having the customizability and the performance benefits of Arbitrum and the Arbitrum ecosystem. I think allows for, like you said, a lot of different ways for whether it's institutions or other players in the crypto space to really find a new home and to continue to grow and expand what they're already doing and also kind of provide that value back to the Arbitrum ecosystem long term, which is amazing. Um, yeah, man, I think that was an amazing ending to this. I want to give you a shout out. Thank you so much for taking the time to be here, for talking to me, and for really explaining a lot of the things that the Arbitrum ecosystem is doing, to our listeners in a more digestible way. I think you're very good at what you do, and I think I'm still going to have to do a little bit more research to kind of digest some of the stuff that we've talked about, and I hope the listeners do the same. If you can, before we hop off, if you can tell our listeners where they can find you, where they can find more information about Arbitrum, and all of the different exciting things that are happening within the Arbitrum ecosystem.
Yeah. They can find me on Twitter at last name underscore first name at Allred underscore Chase. Highly recommend everyone that wants to learn more read AJ's vision doc. Perhaps we can link it in the show notes or something. Follow at Arbitrum on Twitter, at Offchain Labs on Twitter. Yeah, we try to be as active as possible and keep the community informed. If you have any feedback, feel free to let us know as politely or as impolitely as possible. We live on crypto Twitter, so we have
The reality of it. I mean, honestly, you guys kill it. Your marketing team. I think I gave you a shout out on our private conversation last time. I just saw like a post, if Arbitrum were a waffle, and it's like this beautiful Belgian waffle with the Arbitrum logo and some powdered sugar. And even at events and all of the things that you guys do in terms of outreach and marketing and getting in front of people. I think you guys are really stepping in the right way, and it's fun to see and it's fun to engage with. So yeah, if anybody wants to learn more about Arbitrum, follow at Arbitrum at Offchain Labs on Twitter. Definitely one of the few accounts that I have my notifications on for, and I would recommend you do the same. Awesome, dude. Chase, thank you so much again for being here. Genuinely, this was a pleasure, and I hope to be able to meet up with you in person sometime soon and continue this conversation. Awesome.
Thanks for us. Great. Thanks
Thanks,
for
man.
having me.
Talk to you soon.